Hello, traders. It's Tuesday, August 29th. We're about an hour before the open. We're going to look at our previous stock picks. We're going to do some market analysis, and then we're going to find another new pick or two. I'm using Option Stalker Pro in the dark theme. I'm also using some new recording software, so please leave your comments. Let me know how you like the dark version versus the light version, and any comments that you might have on the video quality. So RIOT was one of the recent picks that we had on the short side. You can see how the stock has broken through this upward sloping trend line. These are automated trend lines. It's also below the major moving averages. The yellow is the 50-day, the blue is the 100-day. So we've got this nice breakdown, and the stock has not been able to rally, even though the market has been able to rally a little bit. We're going to take a look at the market. It's doing nothing right now. It is August. Trading volume, very light. Price action, very choppy. So RIOT is doing what we had expected. And I still like it as a short. I'm not going to be giving you any new shorts today because you're going to see 4 or 5 of them that I still feel work in this environment. MARA was another short that I showed you. You can see this beautiful breakdown below this upward sloping trend line. Stock recently had this long red bar that is a bearish engulfing candle. Could not get above that 100-day moving average. Plenty of room down to the 200-day moving average. I still like it. This is a nice short. It just doesn't have the market tailwind that we need right now to go lower. When I like this breakdown here. This is support, so always important to remember trend lines. We like these breakdowns, but they also represent support. So the market's been a little flat. The stock has been able to bounce off of this support level. We've kind of been looking for a bounce in the market the last couple of weeks. We're starting to maybe get one in here. So I'm very neutral, looking for a little bit of a bounce that gets smacked down. That'll tell me that sellers are still in control. When I think still works. Got a nice little rally, I believe, selling the out of the money 102.50 calls, buying the 105s, doing that for a 50-cent credit. I still think that works. Let's zoom out a little bit and see where these longer term trend lines come into play. That is a very long-term trend line. So we'll see if that can be broken. We need to break below these trend lines here. You can see how they're coming into play right at the current price level. Should that happen, then we're going to see a nice long red candle down. Tesla is another short that I highlighted. You can see the stock has been able to bounce off of the 100-day moving average. It's still holding on to these trend lines, and these were caveats for us to taking the short position anyway, but it really hasn't done a whole lot. This is some pretty heavy selling in here, so I think Tesla still looks attractive to me on the short side, provided that we get any kind of help from the market. So those are the shorts that we looked at. UPWK was a long that I showed you. And you can see this big gap up right here. I like this breakout above this downward sloping trend line, but the stock has done a whole lot of nothing. It's consolidating right now. It's digesting all of these gains right here. So it's got a little bit of selling pressure, but with overall market weakness, it has been able to hold this general level. Let's zoom out, and there you can see that's a nice longer term trend line that's been breached to the upside. We had a really nice horizontal breakout here as well. So this is providing some resistance for the stock, but I like the fact that it's been able to hold this gap. So it gaps up post earnings, it holds all those gains, it's digesting those gains. You're naturally going to have some profit takers, so there's selling in there, but they're not able to drive the stock lower. Here we see we have higher lows. So I believe it's just a matter of time until buyers get aggressive enough to drive this stock up through the $16 price level. So I still like it. Let's take a look at what the market's doing. And you'll notice that there is a chart that I've got behind the scenes here. So if I click on that, that is my 5-minute chart of the SPY. And here we can see what it's done the last few days. tries the downside, boom, tries the upside, sells off. So it's not doing much of anything right now. Very choppy price action. And here you can see this was the gap up that we had Thursday. Heavy selling, got smacked right down. So then we test the lows from the prior week, and we have this pretty violent bounce on Friday. And that is really where I expected sellers to gain some control because we had the Jackson Hole conference. Powell was speaking. I viewed his comments as being fairly hawkish. In essence, he said, we're not going to get core inflation tamed until we start to see some kind of slowdown in the economy. And we're just not seeing that right now. So they're going to progressively raise interest rates. We can expect another quarter point interest rate hike sometime this year. And if we go in and take a look at the daily chart on the SPY, you can see how the major moving averages are coming into play here. This is the 100-day moving average. We've breached the 50-day moving average. So let's zoom in a little bit here. You can see we've got this nice upward sloping trend line here. This was the long red bearish engulfing candle that we had Thursday. This was the follow through selling that we needed to see Friday. So we get this little bounce. We've had this sell off in August, and we needed to see that crackdown. We didn't get it. In fact, that ended in a bullish hammer, and that support level was preserved. And then yesterday, we had another bullish hammer right in here. I believe we're going to see the market trying to establish a support level here and trying to get a bounce up in here around that 50-day moving average over the course of the next few days. I'm still fairly market neutral. This rally was decent. It came on decent volume. The price action was nice and orderly, but this decline right in here also has been pretty persistent. August and September are traditionally weak periods for the market, and the Fed is in recess. So traders feel like the market is on autopilot, starting to see some issues in China with regards to their property developers and defaults there. Their economic growth is slowing pretty dramatically. China does not release flash PMI numbers. Those PMIs are going to be coming out this week, so we'll be looking for those numbers, seeing if that weakness persists. And we're also going to be getting the official PMIs out of Europe. Now, those PMIs have been very, very weak. They've been below 45, so throughout the entire Eurozone. If China's growth is slowing, if Europe is slow, where's the growth going to come from to fuel a market rally? I'm not sure that I have that answer. So for the time being, I'm going to go with the price action that's recently presented itself, which is we're seeing some selling pressure and we're heading into a seasonally weak period. We've got a little bit of a bounce, but I'm still looking for that bounce to hit resistance around that 50-day moving average, to roll over, and then to test the 100-day moving average. So as far as the economic releases this week, we have the official PMIs coming out. That'll be important. We have GDP coming out. Now, this is the second estimate for GDP. Usually the first one is where you can get a lot of price movement, but then the number starts to settle in. So I'm not looking for anything big out of the PCE deflator either, which is what the Fed uses as their gauge for inflation. So I don't think that's going to be big news. We do have ADP coming out Wednesday, tomorrow. Job growth has been very steady. We've got the jobs report on Friday. We're seeing about 230,000 in the initial jobless claims numbers. That tells me that the jobs numbers are going to be pretty good. What I would be looking at is the wage component. So as far as hourly wages, they were up 0.4% last month. That's relatively high. So if that wage component comes in at 0.4%, I think that could weigh on the market a bit. But right now, we're in August. We're seeing a lot of choppy trading. Since my last video, the market hasn't gone anywhere. I recorded it before the open Thursday, which was this long red bar. So it hasn't gone anywhere. It's just staying right at this level. and we're seeing a lot of choppy trading. Let's go into that 15-minute chart. I think you'll be able to see it better there. And you can see we've got these big moves that are taking place. Maybe the 1 hour will even show us something different. So you get these big rallies, these big sell-offs, and no net change in the market. Lots of choppy trading. That means the buyers and sellers are engaged. So the market's going to try one side. When that move exhausts itself, we can expect a reversal. The other side gets the ball, then they're going to try and make something happen with it. So we've got end of month, beginning of the month fund buying. That could lend a little bit of support to the market. And given that we have a higher low double bottom right in here, I think that buyers are going to test this resistance level at the 50-day moving average to see what's up there. If we get a nice smackdown and a little bit of follow through, then I think that 100-day moving average is going to be tested sometime in September. We also have a holiday coming up. Trading activity tends to lessen into those holidays. So I don't have any grand market direction that I can provide you with. I think we're going to continue to see some choppy price action. If we do get this little test up in here and then a failure, well, then we've got a nice head and shoulders formation, the neckline being around that 100-day moving average. Way too early to call for that, but it looks like it could be forming in here. So let's keep an eye on that. You've got some really nice shorts to consider. I also showed you Starbucks, and that still looks like a good short to me. You can see we've got this long-term upward sloping trend line right here. We've got that breakdown. We're below all the major moving averages. I think Starbucks still works as a good short. We've got Nike was another short that I showed you in the last video. We have this breakdown right here. This is a low minus trend line breach below all the major moving averages. I think Nike still looks like a good short. We also have this upward sloping trend line right here that you can see visually. We're not drawing it any longer because it's out of range. It's more than 5 ATRs out of range. So we're not drawing it, but yes, that was a nice breakdown right in here as well. So I think Nike is going to be a good short as well. So let's take a look at the long side and let's see if we've got anything working there. I'm going to click on my bullish searches. And one nice thing that you'll notice is it's very easy to spot the strongest stocks with our new column layout. And we've also got a new alert system that we're using to tell us when these stocks are setting up well for day trading. Here you can see, look for all those green dots across the board. You've got heavy volume, you have buy signals across every time frame, and the stock has been strong versus the S&P 500 against every time frame as well. FUTU looks good. So you bring up the chart. It's very easy for you to zero in on the best stocks. Pop Bull, let's see what we've got in Pop Bull. And I'm just going to take a couple of quick looks at some stocks here to find a bullish one that I can offer up to you. I'm going to go into heavy buying and see what we've got there from yesterday, 3M. Carvana, you can see, had heavy volume on a daily basis yesterday, solid green across the board. Let's zoom in a little bit. We've got some resistance up here, a little resistance there, but we've got support at that 50-day moving average. So let's take a look at what this stock is currently doing. I like this rally here. That is nice strength. We're above all the major moving averages. We found support here at the 50-day moving average. We've got increasing volume. This looks like a bullish flag formation that's forming. Get through that $50 price point. This is a nice little horizontal breakout from this compression. Also, the market, as we know, has been fairly soft during the month of August. This stock rallied up and now it's testing that horizontal was resistance, now is support, and it's been able to do that successfully when the market's been pulling back and it's been able to hold all of these gains. I like it. I think that the stock had this nice little breakout. Let's look at the 5-minute chart on it and see what the stock did yesterday. Nice rally, holds all the gains, continues to push higher into the close. I like it. CVNA, Carvana, that is going to be your long. You would use this $50 price point as your stop. I would only be day trading it because I don't know what the market is going to be doing in here. So how could I day trade Carvana? Well, right now the S&P futures are basically flat. I'm going to create an alert on it, and I'm going to look for a little bit of weakness versus the S&P 500. So strength versus S&P 500. I'm going to look for it to go weak and then strong on a 15-minute basis. And I'll show you what I mean, and I'll show you how this is a very effective way to trade using our alerts. So I'm going to go into a 15-minute chart. I'm going to click on studies, and I'm going to put up OneOSI, which shows us relative strength and relative weakness. When the orange line is below zero, the stock is weak relative to the market. When the orange line is above zero, the stock is strong relative to the market. That is our trading edge. We trade relative strength and relative weakness. And so what I'm looking for is right now on a 15-minute basis, you can see how the stock is strong relative to the market. Well, I have an alert set so that I want it to go weak relative to the market. And then when it goes strong relative to the market, I'm going to get that alert. And when I get the alert, I'm going to be watching to see what type of dip did the stock have versus the market. Was it able to retain all of the gains that it had from yesterday? I'd like it to stay nice and tight up to this high and not give back much of the gains, if any at all. And if I get that pattern, then I know buyers are still engaged. And when the alert happens, the stock will have regained its relative strength, and that will provide me with an excellent entry point. What I don't want to see is I don't want to see all of the gains completely vaporized like this, where it goes relative weak, and then I get a trigger right here because it goes relative strong. Even though that was a nice entry point in this instance, that is some pretty heavy selling pressure. What I'd rather see is a dip right here or a dip right here where it's gone relative weak and then relative strong, where it just kind of touched that zero line and then took off. And I start looking at this and I go, hey, this is a nice entry point. Higher, low, double bottom. I'm feeling pretty good about it because it's been able to retrace much of this dip here. Yeah, the stock looks good. The volume's starting to pick up. That would be your entry point. That's how we use these alerts to trade. Thanks so much for watching, everyone. Again, please let me know how you feel about the light version versus the dark version for these YouTube videos. Leave that feedback along with any feedback that you might have on the recording quality. Thanks so much for watching. We'll see you soon. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.